This should be fine. This should work here. So yeah, let's just go over this example here, and then hold on, let me text somebody. But yeah, let me just go over this example here, and then we'll go over like some questions for a little bit. Not too long of a stream, but I want to get something out because I've been not too active because you guys already know. But yeah, let's go over this example. It's pretty good. So let's go over like the daily chart here. You guys can see this weekly candle here. Kind of opens low first, but it opens up with a really, really large, or it kind of expands really far away from this opening price on the weekly candle. So it's going to really be hard for price to do this, come all the way back up here on Friday. It's going to be extremely hard to do because of that large wick. So like seeing maybe this like move back into the weekly range could make sense to, cap it off. This is also a gap in price. So you have a SMT fill there as your first stage cracking correlation. And then you get your second stage here. So now let's go look at price when we actually form the second stage SMT. That's going to happen here. Right here. Okay. So if you drop down, if you go to the triad, the silver triad, let me just show you real quick, because you get a strength switch PSP here, right? This is already a strength switch in itself, right? It's already a strength switch in itself. But for extra confirmation, you get a second stage SMT. And that typically happens when you have SMT like this, where it's like the strength switch is on the higher time frame. You know what I'm saying? So like this is like the previous high here, which is obviously an hourly swing high. And that is the first, this SMT itself is the second stage SMT. So it's typically like those higher time frame second stage SMTs where like you're going to have a swing point confirming it. Typically, you're always going to have a, second stage anyways. And that happens like right here. Yeah. You see how this candle here is bullish. This one's bearish, right? So that can really confirm it for you for this, gold narrative here. Because you don't have a second stage SMT between these assets in a form of strength, at least. I don't know if you have one necessarily. No, it's definitely not going to be a strength switch. You have 15-minute, but it's not. We use 30-minute and hourly to form the high of day, right? So we need that hourly / 30-minute swing point, and that's going to be our second stage crack and close rate. So now you're going to ask yourself, does the current 4-hour candle support expansion away? Nope, it doesn't, right? So no, it doesn't. So if you want to fade a 4-hour candle, guys, you need to hit a key level, right? So we have that. You need that second stage crack correlation to confirm reversal, right? Because you're basically anticipating this candle to be a reversal candle, right? So those things have to, check out, We have to have a reversal. We have to hit a key level because how is price going to reverse, right? You have to have the second stage SMT. We got it. But you can't, the way you want to trade this, like I always teach you guys, is you want to enter high in the range of a reversal candle because we don't know how it's going to close, we don't know how far it's going to expand beyond the open. We don't know if it's going to close like this up here. You don't know. So you're going to enter in the premium end of that reversal candle in anticipation of its expanding away, right? Now, if there's a lot of time left in a 4-hour candle, this is where the 6-hour comes into play, right? If there's like a lot of time left in this candle, 6-hour must come into play. And as you can see, at the time when we create this, right? As soon as you create the SMT, does a 6-hour support expansion? Nope. So you got to wait till this closes, guys. This candle right here. And luckily, candle 3 is the opening price of the 6-hour candle. So it's kind of like you're opening up a higher every candle with an aligned swing, but instead of the 4-hour, using 6-hour. And you're assuming that this is the high of the reversal candle, right? And all you got to do is put your stop loss high in the range. So let's look at the signatures and price here. They look pretty good, right? V-shaped signature. This asset's continuing. We're basically opening up kind of like in the middle of a CSD. So if you want to take a position entry, obviously you're going to take this asset. It's weaker. A position entry means you're basically entering right on the opening price, pretty much, or setting a limit at the invalidation point, right? You can't set a limit at the invalidation point because it's already like an EQ of it. Obviously, you can see this is weaker, not only by the divergence, but also just in price, right? On the lower time frame, we're below the opening price of the CC. Over here, we're not. But signatures check out. If you play price a little bit forward, we run out this high, creating SMT on lower time frame. This is not like a 15 minutes like SMT fill or anything like that. It's just with a lower time frame high, really, in the continuation. And then we CSD that. So if you want to take silver, like this is what you could take, right? I wouldn't take a gold at this point. It's just too kind of like low in the range, honestly. Kind of too low in the range for me to take that. I want to take ideally something off here. That's like the main. Yeah, hold on. Look at that hourly. Yeah, that's like the main low there. That's like ideally because this is your universal model. It's like manipulation of this range high to this range low. That's ideally what you want. So you want to be careful here. I would probably take it over here, honestly. There's much more room. And yeah, you get a gap here and stuff like that. Unless you enter from a gap and you get 2R, I don't know. But if you play price forward, it ultimately gets there. And I didn't see too much opportunity for continuation, really, man. Let's see if there's any really low in the range at this point. So you want a 30-minute gap or 15-minute gap. There's really nothing. You have this gap here, like hourly. It just doesn't hold. Right, it doesn't hold. This SMT does not hold. As you can see, there's no SMT there. It takes it half. But ultimately gets to this draw. There's just like no continuation, right? And if you want to hold down here, that's the next relevant level. But ideally, you want 2R to this relevant level, and you just hold a runner to like here, you know. And then while this asset reaches this low because it's failing to manipulate it, this asset will catch up to this low. That's a leading asset failed to manipulate, right? So that was a good little example there of this reversal trade here. But if you play price forward throughout New York session, guys, you will see this little opportunity here. So we engineer these equal lows, as you guys can see. Engineer these equal lows. If I play price, if I go a little bit closer to price action here, you can see that we have an SMT here. Right, and at this point, the daily candle is more so bearish anyways. We expanded from the open. All assets expanded with the high day. So you have a potential established high day, of course, at this moment. And we have SMT here, right? Right here. And as you can see, this takes price higher. This SMT takes price higher into like some gaps. Or this swing high in general. I don't think there's any like gaps. There's like no 4-hour gaps, right? No 4-hour gaps. It pretty much just takes price into this high. And, you get this PSP here, you could say. There's no SMT, by the way. No SMT here. There's technically gap SMT, but I'm not going to use that. It's too, misaligned. I don't like using gap SMT like that, guys. It's like the most recent gap. That's what you really want to use, guys. Not like gaps, way up here. You're not going to do that, right? Typically. It's mainly key levels closest to price action is what you want to use. But this is pretty interesting here because if you play price forward, we rerun this high at 9 o'clock, sorry. And this is like a strength switch right here to go ahead and break this SMT down here, right? And it's in terms of advanced pre-discount, to be honest. It's pretty spaced out. If I show you in the lower time frame, pretty spaced out there. So that's pretty good, right? So this could be an opportunity here to get in. And since it's such a small range, as you can see, it's such a small range. This is your reversal. This is your draw on liquidity. You can go ahead and drop to the 1 minute. You can see you get the V-shaped signatures that you want in price. And you can take something like this that gives you 2R to the equal lows. Really easy draw, man. Cracking correlation to be the trigger for expansion again, as you can see. Because, if we're going to continue, if we just take a fib, guys, from here to here, it's like this is where we should. There's no like well-defined gap. Like we already used this gap, you know, like this right here. We already used it technically. You see this gap right here? Like it pretty much did its job. It went to IRL, ERL, right? But when we get to ERL, it just so happened that it retraced price. You know what I'm saying? So really, it's just this relevant high in price. There's nothing really beyond this high. It's like this is a relevant high. When we look at this space of highs or whatnot, it's like we should be manipulating this, right? But we rerun it. This creates a two-stage PSP, right, at the time. This candle's bearish. This one's bullish. We run the high out. And yeah, that's just a pretty cool example there for asset synchronization. And then there's really nothing to continue anymore. You see this is a relevant level. The next low is really far away. We can't displace through it. So this is why you kind of just bullshit for the rest of the day. Pretty much, right? But yeah, I thought it was like some good price action to go over, dude. Anyways, I could have done a recap on that, but there it is. So let's kind of go up here. Watching the advanced chords, gap filtering. You mentioned use 15-minute gaps on low of the range. And the 15-minute, yep. Could you give it a recent example? I don't know if I could find a recent example. I might be searching for a while, but it's mainly this. It's pretty simple. I'll just draw it out to make it clear. All right, so you're gonna apply the premium discount, right? Like high and low end ranges with the universal model. So let's go IRL, ERL, right? As our universal model. So this is your higher time for key level. This is your higher time for withdrawal when price retraces, right? So as soon as you get your, two-stage Kraken correlation, for example, first stage, maybe your second stage is a PSP, I don't know, right? As soon as you get that in the lower time for CSD, boom, all right, markouts, premium discount from the reversal low to the higher time frame draw liquidity, right? Now, when we confirm the low of day, high of day, it's always going to be, we're always going to be trading away from that within a swing point on the 30-minute/hourly time frame. And in those swing points, typically, right, is where you actually find gaps. So let's pretend that this is the swing point that forms a low of day, right? Within these previous hourly candles is where you find gaps on the 15-minute, right? They're low in the range because obviously this is the first stage of the reversal, right? So like 15-minute gaps inside of hourly, it's typically hourly. It could be 30-minute, but it's typically hourly swing points are really good, right? So it's like a refined key level from the previous hourly candles higher low. That's where you're gonna find that gap. And typically, this is when C2 reverses into expansion. Like when you have a C2 reversal into expansion candle, typically this is where you're gonna find that happening. Or maybe C3 expands. It's just like if the previous hourly candle expands typically early on a reversal is where you're gonna find it. Because if you open up a candle, and if you open it, if the previous candle basically closes near its own high, that means there was some type of expansion on the lower time frame, which can create gaps in price. So you don't want to just enter price, on the next candle, like open low, high, close. If there's a gap, if there's like a 15-minute gap, inside of this, right? Because if you go open low CSD, your stop loss is right above a 15-minute gap. That's what we don't want to do, right? That's not really a protected level necessarily. Now when price expands away from our swing point, especially when C3 expands, that's going to create a future gap in price, like typically always, because you already know the opening price of this next candle is like really far away from the closing price or the highest point of C2. So you're going to form a gap, right? This candle is going to open low. What is that creating? A gap in price from here to here, right? So when C3 expands, C2 expands, just the swing point in general, that's going to create a gap like this, and that's probably going to expand into premium, So here, let's do this. Probably going to expand into premium or some relevant level internal to this premium discount, and that's where you get that new phase of price. Like I said in my last lecture, the swing point from low of day is going to expand away. Candle 1, candle 2, candle 3, candle 4. That, key level that forms from it is typically what you're gonna continue for the session, the session you're trading pretty much ideally, right? Or just in general, just continue in general from it, right? And that's typically going to be found in EQ, right? And obviously on the 30-minute or above, right? That's where you're going to get that new phase of price on the 30 minutes less hourly because it just expanded. Right? So that kind of makes sense. We don't want to use like 15-minute gaps really high in ranges. We don't want to do that. We also just want to always be within a 30-minute or above swing point. Like every time you take a trade, bro, are you within an hourly or 30-minute swing point? Ideally, that's what you want to do for every trade you take. Like you want to be within daily 4 hour, 1 hour / 30 minutes. Like candle 2, candle 3, candle 4, typically. That's what you want to be in. Let's see this. Okay, wait. Okay, I don't know what happens. What asset is this? Price reversal of 2-stage and forms 15-minute gap following the reversal. The next 1 hour candle opens low, then mark the premium discount range from the reversal point to the current price. The 15-minute gap is located deep within the premium. Later during the same hourly candle, price trades back to the 15-minute gap and forms SMT. Can I take the entry from the SMT, or should I wait for another gap because the setup is too deep in premium? No, I wouldn't say it's too deep in premium necessarily. I wouldn't say that. As long as it's not creating equal highs, bro. Like these are not failure swings, I would say. I wouldn't say that's failure swings. That's what we're mainly concerned with. Yeah, you can take this for sure. It looks like a higher tempered candle opening as well. It looks pretty good. Bunch of failure swings with lows. Yeah. And even like, dude, even like if you guys are like up for that, you get this 15-minute CSD here, like you can technically take that too, bro. It looks like 2R to the low. You can technically do that. But no, you don't have to wait for another gap, brother. As long as you're not creating failure swings, that's the thing. Yeah, it's just Discord, man. I don't know what's up. Stream is laggy. It's fine for Zero. It's because he's recording. Oh shit, man. All right, let me catch up. Is the stream lagging, guys? No? Yes? No? A bit? Yeah. Fuck. Oh man. Okay, I don't think it is, dude. It's just Discord, man. It's just Discord. Okay, most people it's good. Yeah, I understand, bro. I just, dude, I don't know if it's Discord, like, I'm not sure, brother. Like, it's Discord. I'm telling you, it's Discord, bro. See, like most people, it's fine. You feel me? Like, it's pretty weird. I don't understand. But yeah, I'm gonna have to get with Simple. He knows a lot more about this stuff than me. But the recording should be good though. Like the recording will not be laggy. Let's pick up where we left off, guys. We're somewhere around there. On Thursday, YM entry, while you were entering the trade on YM, the hourly wick was huge across all assets. Why did you still enter? Was it because of the strength switch and equal highs? Let's go on that real quick. YM trade. Thursday. Was this it? No, that was not it. YM. This was a large wick, are you saying? Oh, what day was this? The 9th? I genuinely don't remember like what day this was. I don't even remember what I'd be taking, man. Yeah, this was it. I don't know if the wick looks that big, bro. 10 o'clock opens here. Am I tripping? Doesn't really look too big. But yeah, I mean, it looks fine. Where are we at? Let's say it's good. I mean, maybe on NQ and ES they were large, but you could still trade the strongest asset because I mean, if we're gonna continue, we're gonna catch up and break the SMT or whatever it was, lag asset, whatever. I mean, yeah, it's gonna form right there. That's where I'm assuming the low to form of those reversal candles. Okay, hold on. So like earlier it was like messed up. I see a lot of people they could not see. But everyone's saying it's good now. Can't see anything? It's okay, if you can't see anything, like that's absolutely a Discord problem, like 100%. Like for sure. I'm on my hotspot and it's working good. Yeah, like how would it work for people? Like some people, but like if it was me, it wouldn't work for everyone, right? It's gotta be freaking, dude. It has to be Discord, man. Works for 90% of the people. Yeah, I genuinely don't understand like what I can do if it's Discord. Like, do we stream somewhere else? You think YouTube? I don't know. We could maybe try YouTube, but like a private, you know. I'll ask Simple. He'll help me set up YouTube stream. I never done YouTube streams. I think I did once. Yeah, I get it, Pico. 100%, I get it. But it is being recorded right now. Yeah, Discord is being weird. That's for sure, man. But anyways, I thought you only use candle 4s on the higher time frame, like 4-hour daily, don't hourly and through. Yeah, I don't. Yeah, you're right. Like candle 4s, if they're creating a gap, absolutely, I'm not going to trade it. It's pretty rare when I trade candle 4s on the hourly and 30-minute, honestly. Yeah, that's true. There's like rare cases, but do you recommend skipping lunch session? Sometimes I win. It's just okay. You can trade any session, brother. It's all about the framework, right? So like, I wouldn't want to trade London session if, for example, Asia just freaking skyrockets or something, right? Because then if the previous session expands, you never want to trade the next session usually because it's probably going to give you a new phase of price. Or if you just can't trade every session, like it's impossible. Usually when you want to trade Lund session, dude, honestly, it's gonna be continuation days where you're like opening near the refined key level, right? And for reversal days, you're opening near the relevant level to reverse the higher time frame or whatnot because you're basically anticipating a daily reversal candle. So you need to be opening near that level, right, to form a small wick. Just like Aegis session, for example. You know, here's the previous day's range, for example. I don't want to trade Asia, dude, if the previous... Basically, if the day opens up really high in its own candle. Like, so for example, let's just go to like a daily candle real quick. This is what I mean by this. Like, yeah, like this. Like, I'm not trying to trade Asia session when the daily candle closes like this. Why? Because if it closes like this, that means that probably PM session expanded, right? And so what would Asia probably do if the PM session expanded? Probably consolidate, right? That's just like not what we don't. You don't want to see the pre-session expand, right? I want to see the previous session consolidates, ideally. Consolidate, retrace, because those are like continuation signatures. And then you can also like reverse off those session highs and lows. They like engineer like key levels to reverse from. So it's like super easy. I know exactly what key level price should be reversing from. Ideally you want that. What else? Or just like the previous session reverse, but not expand. I mean, it can expand away, but not have to draw. Like you need an open draw always for the session you're trading. Because, I mean, why would you, I mean, if there's no open draw, then what are you trading towards, right? But yeah, you want to be selective, like with London, in Asia, because there's less to look back on, right? You know, when you trade Asia, I mean, you don't have anything to look back on, right? For the previous, you have like a PM session pretty much. Like, you need to be very selective when you trade Asia. It's the earliest time of the day, right? And then for London, you only have one session to look back on. For New York, you have two sessions to look back on, so it's the easiest to trade, to be honest. Recording should be good. Yeah, recording should be good. Yeah, you want me to try ending it real quick, guys? Real quick. Just for the, it will do it, honestly. I'll do this, like, I'll just do this. I don't know if this will do anything. Let me know. Okay, now my screen is black. Cool. I gotta exit out completely. Yeah, I think I do. Oh, no, it's good. Did that do anything for anyone? Oh, really? Oh, shit. Wow. Okay, we'll start doing that. Hello, Swash. What's up, buddy? Made a checklist for London. What do you think? C2. For C2 reversal, candle. All right, I'll probably look at all right, send me this in the chat. I'm gonna look at it, all right? Discord is trash. Yeah, it is. Little bits. We ain't got much options though, man. I'm clear on the GXC model, but I feel like I'm lacking experience. How many months of backtesting do you think are enough to gain solid experience? I've forecasted since March, but I don't think I've been doing it the right way. So it's gonna be different for everyone. I would say like backtest at least a year, right? That's gonna give you a solid foundation. But I would always recommend, man, if you're new to, like, okay, you're clear on it, you say. But I would still like go back in price and just go back in hindsight. Just mark out everything, right? That's gonna help you. You gotta understand, like, you're gonna understand like why price did this, why price did that. Mark out the valid losses, the wins, and just train your brain. You're gonna train your brain, like, why did price do this? Why did price do that? But the bad thing about hindsight is you start making up. You can start making up BS on why price did this and that, but you need to be honest with yourself when you do back testing through hindsight. You got to be honest with yourself. You got to have like a set rule system, right? But I would recommend doing that, because if you don't understand the GXT model, or you just don't understand in general, and you try to back test, it's gonna be really hard, bro. Like, it's gonna be really hard. So you gotta train your brain first. Maybe try that, bro. But yeah, man, I mean, I used to back test so much, it was insane. Like, I used to come home from work and just do that for like literally all the way until nighttime, like late, and just do it again, do it again, do it again. It's gonna take a long time, man. This shit is not easy. I'm being like, for real. You might want to simplify it potentially. Um, and as time goes on, you can start adding things. That's another thing as well. Because if you start, adding too much things at once as a beginner or whatnot, it's going to be difficult. It's going to be really difficult. If we form a low of day and create gaps, those are the new invalidations, yes. And the protected low of day gets reswept. Is that in? So like that is already a red flag, because that's probably seek and destroy. Now it depends. If we create, let's say this is pre-tase range, we open low first, we create a swing point. You don't want to see this, all right? You don't want to see price expand away from that swing point, hit something relevant, and then come back down here to resweep. No. You don't want that. Now, if it does this, okay, that's fine. That's fine. You know what I'm saying? Because this is just a relevant low. This didn't come from anything relevant. If the high of day is still unprotected or something, that's still cool. You know what I'm saying? There's a big difference there. But yeah, send me this, Sam, and I'll look at it. So it's going to take me a minute to go through it. I was trying to find a stream where you're talking about models on models. You mentioned that we should have a universal model on the 4-hour plus. And then, yes, exactly. Yep. Ideally, guys, when you do frame a trade, ask yourself, are we within a 4-hour and above universal model? If you're not, you're trading bullshit, probably. All right, probably you're trading bullshit. Because there's no real framework. You know, you're not going to frame the daily candle typically around an hourly universal model. Probably it would be like such a small range. Like it's possible, but it's probably ideally you want it to be a 4-hour swing low or high, right, or something, right? Now it's totally different, right? Now when I say 4 and above, like it's not saying you can't create the low of day from hourly or hourly universal model, for example, right? But just make sure that you're already within a universal model. For example, like, if this is the 4-hour universal model here, all right, my mouse is bullshitting, huh? This is the 4-hour universal model. The previous day reverses, right? Something like this, and then here's the daily open. Like, just because this day is forming the low from an hourly swing low, this hourly swing low, doesn't mean you're not within a universal model. You're already within a universal model, right? You're just trading models inside of models now. I'm not saying you can't trade a low day from hourly above, right? We know you can. We just need to be inside of a 4-hour universal model, right? And that means get in before we take out this draw here. Right? Once we take out this draw here, you automatically go to what? Who can tell me what you do when we take this high out? Who could tell me? New phase of price. Okay. Yes, but what can you do potentially though? Lagging asset. Yep. You automatically look at those correlated assets like what are is this SMT? Because it's going to create SMT. We know this. Every single time it's going to create SMT. Is this SMT valid? You're going to ask yourself, right? And you can refer to asset synchronization in the course to understand when and where it's applicable, right? That's what you're going to ask yourself. Like, is this SMT going to reverse price? Or can I trade the lagging assets to the same high? Now, when all assets reach that same high, that's when you get a true phase of, like, new phase of price, No wonder you gotta pay up. This is a strength switch. Yep, I was talking about this like in my recap. Like, this could be that potential decoupling anticipation in the course, right? Because this asset over here, YM, it took out all these highs. Let me show you real quick. It's just like you would take the trade in anticipation of it happening without confirmation, which is riskier, obviously. But the idea is valid. The idea is valid to do or to think of, right? So, for example, 9:30. Let's go over here to NQ. Someone's mowing their lawn. This is great. Perfect timing. All right, so you're already bullish, right? This is the good thing. We're already bullish. We're already within a universal model. So, guys, who can tell me, like, hold on, what is the leading asset in the lagging asset within a universal model? Who could tell me? Like, what are we kind of looking at, really? I can't. Hopefully, I like phrase that good. I don't know if you guys can answer that. Probably like ask that question bad, but right there, yeah. Okay, hold on. Sorry. All right. So when you have a universal model, the move away from the drawn liquidity should be what? Viewed as what? Yeah, retracement, right? So basically, that decoupling move away from the drawn liquidity is what? Like the fake asset, right? Or the asset that's like lying, right? And the asset that is expanding towards the drawn liquidity is typically the real move, right? So this is what we have here, because here we have a universal model. We have a range low being taken with SMT. And on the daily closure, we create a second stage cracking correlation in the form of a strength switch. As you can see, the previous day expands. So what can we expect the next day to do? To trade into the previous high for C4, but also this high here, which is really nice. Like this framework coming today is so good. Honestly, like it's so good. It's just a PA was dog water, man, unfortunately. But that happens, right? But as you can see, we have these relative equal highs, man, on the 4 hour. The day opens low first, dude. Like we have a PSP at the low day. Like this is perfect, like, right? You know what I'm saying? Coming into the driver, you can see that YM already took out the previous high. It created SMT a long time ago. Typically, that's how you know SMT is gonna break. You see how we created this SMT at 4 o'clock in the morning? You see that? But we reached up the high, and then we reached up the high again. That's not this SMT they're saying is not real. Typically, like it's not real SMT. It's holding, but it's not real. It's probably gonna break, especially because it's counter trend to the overall draw liquidity, counter trend to the overall daily reversal. So we know that an SMT like that is probably just used to retrace price and whatnot. So I'm thinking when you get this decoupling, when YM starts to expand lower and then NQ starts to expand higher, automatically assuming this is a strength switch for NQ to catch up to this high. That's what I'm thinking. And you would start to assume, you would start to look for areas in price where YM would go and manipulate. And my eyes goes here, to be honest, because this is a failure swing. It's a failure swing. So I'm thinking here is where I would want to see this get taken. But you can technically trade NQ before this asset even gets there, technically, right? It's the coupling anticipation. You're anticipating this asset to reach something, a relevant level, create SMT. Obviously, it's going to look like this, ideally, where it takes a low, and then that's going to resync price, because that's all it is. The decoupling market is just price expanding into a key level, creating SMT, and then a resync. That's all it is. That makes sense to everyone, but it's a little advanced. It's not for everyone. There's no confirmation to it, but it has to be used in a certain context for you to even like begin to think about doing this. Does that make sense, everyone? Yeah. Okay. Cool. So this is an idea you could have taken, and ideally, bro, you get it at right at 9:30. To be honest, like you take this or something. But I guess you could, right? You technically could. Like anything up in here, like you could technically take, honestly, because I don't really want to see YM return to this, or not YM, sorry, NQ even retrace this deep, because this is about 2R. So you could technically take this. It's just a loss, probably, right? Well, not probably. It is a loss. You would get shit on, right? Now we do create a failure swing. You're anticipating that obviously NQ is going to be the asset that's creating failure swings. So basically, the higher low in price, while this asset creates lower lows, right? That's what you'd be anticipating. But it just so happens that this asset retraced really deep when it created that failure swing SMT, which is unfortunate. Before even hitting anything, honestly, like it didn't hit anything, honestly, but it is what it is. So this is like a valid loss in my opinion. It's just advanced, like no confirmation. It's in anticipation, right? So it's a little bit advanced. Whether you take that at 1 minute there, maybe you enter in this gap or something, because this gap is where you want it to create the failure swing. It just, you see how the deep retracement, it's gonna stop you out. So yeah, that's what I think about that. But I do think it was valid, going into it. Could you please go over how you approach prop firms? How do you pass quickly without gambling? Yeah, you don't want to gamble. That's just stupid, in my opinion. You're gonna treat it regular, like a regular trade. You're just gonna up the risk, right? It's up to you, really. Like, how attached are you to like failing an eval? Are you profitable as well? Because I don't think you should be full porting, especially if you're unprofitable, because you're just gonna blow the funded account. If you're already profitable, um, you can use the money that you're getting from payouts to potentially fail these evals, right? So they don't really mean much to you because you're probably already up in profit or whatever. But I would typically say give yourself like three chances or so, somewhere around there. So divide the overall drawdown into 3 or 4. and you're pretty much good. A lot of these prop firms you can't pass a 1 day anyways. So, for example, like 50% consistency rule, so you're only going for $1,500. So maybe risk like 500 to 750 to make 1,500, assuming that you're going for 50K. That's pretty much how it is. It's really like up to you though, you know, how you want to approach it. You said in Q on Friday, the low of the day could be set here, but the thing I don't understand is the key lows of 6 hour fair value gap, even though we have a nice Tuesday SMT. The 6 hour gap we swept like so much times. Let's see. That's not really the SMT. That's not really a key level that we're really using. Let's go to it. It can be viewed as potentially this right here. Maybe this swing low. It's just like opening low first and has a decent retracement size is really what I see. It's not like the cleanest key level. I think it's on ES actually. It's this ES right here. It's just like you don't have SMT with the key level. Actually, you do. Wait, do you? Yeah, you technically do. But like I said, like what did PM session really do? It expanded. So you're not going to get like an Asia reversal probably, right? You're maybe even a London. So it's still fine though. Like I think the SMT is something like over here with YM or something. Yeah, it's like some space SMT or something. Yeah, it's actually not that clean to be honest, but we just expand away from it. You're not trading the low day anyways. Like it's as simple as this, bro. Honestly, like it expands away from the initial swing point that creates a low day. You're not trading this anyways. This is the relevant times in the day. So you're not trading that. But if I pan over here, we do create a gap from it, right? Pretty simple. Create a gap. Hold on, let me do this. And price here. And we didn't even hit this high. And the YM, we know that YM failed to manipulate this high already. It already traded into it, and then it traded into it again. So it's probably not going to hold. This asset's creating failure swings as well. So there's clearly a low day here. The day's opening low into a 4-hour gap. It's just a 4-hour PSP basically, right? This is a PSP. Bullish, bearish. It's not a two-stage. You don't necessarily need a two-stage SMT to just trade away from it. You just need a two-stage SMT to trade the reversal. You know, we're not trading the reversal. We're trading continuation, right? And this gap needs to hold. You want like either an SMT fill or PSP, right? And that's where you get this hourly PSP at 8 o'clock. You see it's 8 o'clock. So if we're going to continue from this here, we already retraced deep enough in the range. Like we shouldn't have to go lower, right? So this is where you'd expect ideally the next candle to expand. This asset still has a reason to continue beyond the previous high because it has this high, right? But I was in my recap. I said like this is perfect for a positional entry. Honestly, it's so good. But the only problem here, dude, is the lower time frame signatures are kind of mid. All right, like this is kind of choppy a little bit. So it's kind of up to you, but yeah, it's a little choppy. So, but this is what it would look like, something like this, right? You enter right before it, put your stop loss ideally below here, like 50% of the wick or something like that. But you need at least 2R to this high. So it actually have to look exactly like this, pretty much like that. And you'd basically be expecting the next candle to expand away, right, into this high, pretty much. So that's like valid, but everything is very clear except the lower time frame is not the best, right? This CSD is like kind of mid, as you can see. You know what I'm saying? That's kind of like discretionary, but I don't think I would take it. Like I'm pretty picky. When choosing between quarterly assets, should we trade the strongest asset for a long and the weakest asset for a short? Instead of quality override relative strength. Typically, the asset that's closest to the draw, right? In this case, gold, euro. We have micros and silver. Yeah, so looks like here, like sometimes this happens, bro, where like you might create the SMT here. I would always typically look at this asset to first long, right? But sometimes, price does switch strength. For example, like If there's a reversal here, for example, right, at the time this is weakest, but in the continuation, if this asset is the one that, for example, maybe creating an SMT fill, I'm going to focus on this asset because it's showing strength at the time. For example, if this asset's not trading to a gap, while this one is making a deeper run into a gap, obviously this asset is stronger now, right? Typically though, you're going to go for the one that's closest to like the draw or the one that's creating the SMT. So if you're going to trade this reversal, you would trade this asset, for example. But in the continuation, none of the assets hit draw liquidity anyways, right? You could trade whatever is strongest for the current time being, you know. Does that make sense? Okay, I already went over that. You guys are probably gonna wrap it up pretty soon. Obviously I can't get to every question, but it's just a pop-up stream, guys. But yeah, if you guys have any questions, put them in the chat. I'll get to them all. I have an issue trusting my SMT highs and lows. And you can say, we'll wait for a two-stage, but ideally when price trades into a key level, you form an SMT. What would be the first three things you're looking for? SMT being spaced out, and ideally in premium discount scenario. What else? So it's all about SMT with the relevant level. That's the most important thing. You want the profile to actually support that idea to trade away. You need narrative behind your trade. That's the first step. Like you need narrative, right? And then you need a key level. You're gonna use that key level to get, towards your draw liquidity, right? So the first thing you're gonna identify is like a draw liquidity essentially, and you need a key level to get to that draw liquidity, and then that's the key level you want to SMT with, right? And then you need that profile that you're trading to support it. You need expansion candle alignments to trade away from it, and then just signatures, right? V-shaped signatures, like demand V-shapes, guys, gaps in price, stuff like that. And you're pretty much good, man. Like if it loses, it loses. Like if all these things are aligned, you didn't do anything wrong. Like you're gonna lose sometimes. What's up, you draw? But if maybe the problem maybe could be your key level selection or like your narrative. Maybe you should try the universal sequence where you just demand a gap away from it and trade that, something like that, for a little bit more confirmation or so. Just focus on continuations. Friday shorts, I would not be shorting. I'm not gonna lie. Personally, would never consider shorts on Friday. I don't care if it worked or not. Can you show how to use SMT when comparing two assets if one asset has a fair value gap and the other one doesn't? How do you use SMT in that scenario? Oh yeah, I gotta find an example. This might be hard. Where can I find an example, brother? This might be hard to find. It's pretty simple. Like one asset, for example, it's gonna look like this or something. Where one asset has a fair value gap, obviously, like this. And then maybe the other assets, candle 1, candle 2, candle 3. So these wicks are meeting. And then this asset takes out this high, right? But which is not a key level. But that previous candle's high on the other asset is a fair value gap. You know what I'm saying? You get that? That makes sense, kind of? It's pretty much that simple. It's pretty simple. Yeah, not gambling. You're talking about evals? Yeah, it's just upping the risk. It's simple as that. When prices are coupling, do we always demand a strength switch? Or so you can only like anticipate, and trade that decoupling asset that's expanding towards a draw. It has to be in a specific framework, like I just mentioned. It has to be. Otherwise, you can't just trade decoupling anywhere and everywhere because you don't have a defined draw and a defined universal model. How can you anticipate which assets is the real one, right? Other than that, you can wait. If you want to trade the lagging asset, yes, you're going to wait for it to decouple into a key level and then a strength switch. But if you want to trade that decouple move, yeah, it's super specific, man. It really is. Like I said, you just want to be picky with it. QT course. So the QT courses consist of quarterly opens, so that's coming out soon. Which is like the guys, it's like the last thing you should be concerned with. But yeah, that comes out very soon. I pretty much almost done with the slides. Just have to record it. And I did not anticipate my sister come, by the way. Like, that was so random, dude. I was just busy for the whole week, dude. Actually, crazy. Tuesday indices. All right, this will probably be the last one, guys. Tuesday indices. I do not remember at all. Tuesday indices. Okay. This is Tuesday, right? Yeah. So coming into the week, oh no, that's Wednesday, my bad. This is Tuesday. All right, so let's see where we're within right now. Okay, you're not within a universal model. Really, honestly? This is when price is like super decoupled, dude. You're not really within a universal model, I would not say. This is like super low probability. Like, look at this. Notice how this asset has not taken out, like, yeah, this is crazy. This asset has not taken out any previous highs, but this asset has, like, boom, 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 boom. It's like super low probability, like this PA in general. YM is at the highs here or whatnot, taking out the pre-6 high, it looks like. Let's go into the day here. The day opens up right here. Okay, so this is definitely some spaced out SMT of some sort here. Yeah, it's just awkward, man. You see how they're not the same highs? Like, look at this high. It's a relevant high, right? Whoops. Like this is a relevant high. Oh my gosh. Okay, there we go. This high is a relevant high over here, but when I take that same high, it's like right here. You know, this is like weird SMT, super weird. So I just automatically think it's low probability, honestly. This asset starts to consolidate. I don't even know if I took a trade here, dude, or not. Yeah, super mid, honestly. Oh, I was asleep. Okay. This is the strength switch here. Like this. Yeah. I did not hop on the charts because I was actually busy with my sister, but yeah, I didn't hop on the charts, but here is technically a strength switch here, right? ES, where's ES doing here? ES like breaks this SMT at the high while NQ holds it. Yeah, I mean, like, you can definitely trade this. Is it at, what time is it? So it's at 6. You're fading the reversal candle. Yeah, it's kind of like, it's risky, but you technically could, I guess, bro. Let's go to daily here. Daily, or even the weekly. Nah, I don't know, dude. It's all right. I don't know. That's like the only thing I saw, bro. Like, I'm not shorting indices like after we take out low because this is just too far away. The pre-session expands a lot. That's what I don't like about this. Like, do you see how they're decoupled overnight? Right. I mean, the resync is gonna happen typically at 9:30. But yeah, like I'm typically not interested. Like, this asset expanded so much overnight, you know, and then look, we're just consolidating. And we take out like an internal high or something like that. Let me look at ES. ES at least take out this high up. No, it's also pretty mid, to be honest with you. Again, they're not the same highs. You see how this is not the same high? Yeah, pretty mid. Not that great, honestly. This is a strength just PSP though. I would say like not. I don't think I would trade 930, bro. I don't think I would trade this at 930 like directly, but maybe after this strength just PSP like potentially. I'd maybe entertain it for NQ. But it already reached this low. That's the problem, bro. It like already reached this low. Maybe ES or something. Potentially ES. Let's look at it real quick. Okay, like V shapes after that. Yeah, like maybe ES, bro. Probably, potentially like this low or something. I don't know. It's just like, all right. Yeah, it just instantly gets stopped right there anyways. So that little 1 minute would have lost there. Does that create another freaking SMT? No. It's just, yeah, it just wicks you out and then goes. So I guess you get back in, but I mean, what's the RR there, bro? Not even 2. I guess you'd have to go like that. I don't know. It's just like whatever day. I don't know. I would probably have to take it after this close, and then you're like anticipating that NQ will fail to manipulate this low here and go to here, while like ES and YM like catch up to this low that NQ failed to manipulate. Like this is obviously a strength PSP here, so it would be decent. You know, I look at YM here. YM, you see how like we're holding this SMT? Like I do teach this where like if it's holding SMT, there's a couple reasons why it could be waiting. One of it is time, like it's just waiting for time to align, and that would be 930 potentially. But you always need a strength switch, like always with this type of SMT. Like you have it, it's just in a weird like kind of scenario, I would say. But yeah, like potentially after this closure, I would need just a little bit more, right? Just a little bit more. Potentially of that. So like one of those two trades, like loss and a win or whatever. Like you could maybe take NQ, but you just have to assume that's going all the way down here, which is like hard to ask, bro, because the daily candle is already massive. Like at that point, it's pretty big, you know. It's just hard to know. It's honestly hard to know, and there's just not any framework. That's the problem with this trade. Not really any framework behind it, honestly. That's kind of the issue here. It's just a 2-stage at the high day. That's it. So just like not the biggest fan of it, to be honest, man. But that is probably the end here, guys. I just want to do a quick little Q&A for you guys, and hopefully that recorded and stuff. So, but if you guys have any questions, if I miss any question, guys, just forward it to like general chat, and I'll get to them. So I'll still get to all your questions, just not on stream. He bought a C8. How do you know? How do you know what I drive? All right, guys. I'll catch y'all later. Hopefully, you guys learned something. Y'all have a good one.